Hello everyone, in this video we are going to start with problems on mergers and acquisition. So the first question is, the following balance sheet of P&S Limited as on 31st March 2015. They have given liabilities, balance sheet of P&S Limited. Both the companies, they have given the liabilities and assets are as follows. So here we have equity, preference shares, general reserves, export profit reserves, investment allowance, P&L account, 13% debenture they have given, current liabilities. Under asset side, land and building, plant and machinery, furniture, fixtures, yes, fittings, investment, stock, debtors and cash they have mentioned. P Limited takes over S Limited. So here P Limited takes over S Limited on 1st April 2015. P Limited discharges purchase consideration as follows. The following information is related to purchase consideration. So first point, issued 35,000 equity shares of 10 each at par, which means 35,000 into 10 we have to calculate. Remaining issued 15% preference shares of 100 each to discharge the preference shares of S Limited at 10% premium. So we have issued purchase consideration in the terms of shares. One is equity shares, another one is preference shares. So preference shares are issued at 10% premium, which means 100 into 10%, 100 plus 10 rupees. So we issued at premium means for 110 rupees we have issued the preference shares. Next, the debentures of S Limited will be converted into equivalent number of P Limited. So S Limited debentures are converted into P Limited. So we are going to convert and show the entries. So statutory reserves of S Limited, export profit reserves, investment reserves are to be maintained for 3 years. So we are going to maintain these two reserves in the P Limited. So you are required to show the journal entries and balance sheet in the books of P Limited, which means we are going to pass the journal entries in the books of transferee company. We are not calculating realization account, or we are not showing the transferors company's account. We are reflecting, so we can say it as we are showing only the opening entries of the P Limited after the acquisition. So we will calculate the purchase considerations value. So purchase consideration they have given. So issued equity shares of 35,000 equity shares. So equity shares 35,000 for 10 each. So which means the total value will be 3,50,000 or 3,50,000. Next we have preference shares. So what they have given in the preference shares, 15% preference shares of 100 each to discharge the preference shareholders of the S Limited at 10% premium, which means we have 1,70,000 shares, isn't it? These 1,70,000 shares is the par value. Par value means nominal value. So these shares are given at 10% premium. So 1,70,000 into 70,000 into 10% will be 17,000. If you add both means we will get 1,87,000. So number of shares will be the value of preference shares. How we have calculated, again I am explaining it. So the par value of preference shares is 1,70,000, but these preference shares are issued at par, which means 1,70,000 plus 10%. So total value will be 1,87,000. If you add both the values, we will get that number of shares we can easily identify 1,87,000 divided by 100. If you minus 100 divided by 100 means you will get 1,070 into 100. This is how you can calculate. Okay, so this is the value of purchase consideration, particularly to the preference shares. If you add both the values, we'll get the PC as 5,37,000 as the PC means purchase consideration. So the value of purchase consideration is 5,37,000. So this is how we'll calculate. Next, I think we have already discussed everything. So before passing the journal entries in the books of transferee company, which means in the books of P Limited, I have calculated the value of PC. Okay, so this is the value. So now let's move on to the calculations. So I'll show the format where we can solve. So this is the journal entry format. We have to give the heading as journal entries in the books of transferee company, which is we have P Limited now, and also you can mention the date as well. So here I have not mentioned any dates because I need this basic format for every questions, so I haven't changed the heading. Yes, so basically if you want to start with the problem, you should know the basic entries, that what are all the things we are going to pass in the transferee company. See, we have this is the format. We have basic journal entries in the books of transferor and transferee company. So we are calculating only transferee company. So we have only 4 entries here. See, first entry will be purchase entry due. Next, incorporating assets and liabilities, which means we are taking over certain assets and taking over some liabilities. Next, incorporation of statutory reserves. Any reserves which we are going to take, we are going to incorporate that reserves. So PC entry, assets and liabilities entry, reserves entry, and discharge of purchase consideration. These only 4 entries we are going to record in the books of transferor. So right, you got it right, only 4 entries. So these 4 entries are we are transferring in the journal entry format now. Next, they have given us certain informations. In questions they have asked us to calculate balance sheet, very regular balance sheet, very normal balance sheet, no changes in the balance sheet format. So I'll show the questions now. Yes, these are the questions. Okay, so first entry as usual, discharge of we are going to enter the PC due entry. So first entry, so business purchase account, debtor to liquidator. Why we are mentioning liquidator? Because S Limited is got to wind up. Liquidator of S Limited. So being, if you passing any basic or simple journal entry also means you have to mention the being, because we should know the reasonings, right? Being purchase consideration due. So this is the entry. So we are going to write the value of purchase considerations. So 5,37,000 is the value. Credit nil, debit nil, 5 lakh. 37,000. This is the first entry. Next one, so we are going to incorporate the assets and liabilities, isn't it? So listen carefully. You have to look into the value of assets in the S Limited now. So you should have the questions, students. If you don't have the questions, it will be confusing always. So I can keep on showing the questions always. So first thing, you should have the questions while solving the solution. Then you should understand the question. You should understand the question, what they are asking, what we are preparing, final outcome, what we have to do. You should know all these three concepts. Then only we can solve it. See, asset side, all the assets we are going to transfer it now. Okay, so one by one till it starts from land and building to bank account. Full assets we are going to transfer. Start from land and building one by one. Next assets also we are going to debit it. Land and building, plant and machinery. I'll just write plant. Next we have furniture's account, furniture and fittings. I'll just write only furniture. However, you are going to have the questions in your hand, hopefully. So next we are having investment account. Sorry, I'm not writing the assets value. Sorry, I thought of writing in last, but I'll write now only. So land and building, we have 1,55,000 in the asset side in S Limited. Next 1,70,000 plant and machinery. Furniture we are having 35,000. Next we have 95,000 as the investment value. After investment we have having stock account debtor. Stock value 1,05,000. Next debtors account. So I'll write debtors, you'll get confusions maybe. So debtors account 1 lakh 52,000. So this is 1,03,000. 1,03,000, 52,000. Next we are having cash account, cash and bank 50,000. Yes. So leave a line. Why I'm telling to leave a line means we have to identify lastly whether assets are more or liabilities are more. So we should calculate both the debit side and credit side. Then we are going to finalize the value. Got it? Yes. So liabilities, we are going to start from 13% debentures account. So debentures account 35,000. Credit side you have to write now 35,000. Current liabilities, current liabilities account 50,000. After current liabilities, export profit, because in question they have mentioned we have to maintain these reserves for at least 3 years. So 20,000 we are transferring it. Next we have investment allowance reserves. So investment reserves, so valued at 10,000. Next to P&L account we have profit and loss account 50,000. Next we are having, after all the liabilities, even we have to mention purchase considerations, because purchase consideration is due, friends, isn't it? So PC is also liability for me, so to purchase considerations. So purchase consideration value is 5,37,000. So these are the values of liabilities. So both the sides you are going to add it now. So if you add credit side, 35,000 plus 1,60,000 plus 5,00,000, 6,60,000 plus 37,000, 6,37,000 plus 37. Okay, it's around 6,42,000 something. Yes, 6,42,000. If you add debit side, so we have 1,55,000, 1,70,000, 35,000. So we are having more liabilities and assets are very less. So around we are getting balancing figure as 42,000. So this will be transferred to general reserve. So general reserves account. So we are going to consider this as a capital loss. So we are having capital loss account. So this loss will be transferred to general reserve. In case if you had a more assets and lesser liabilities, means the balancing figure in credit side will be transferred to even same as the general reserve, but considered as capital gain. Got it? So after this, it's going up. We have to write the being also, we have to mention it, isn't it? So being will be incorporation of assets, and liabilities, and liabilities and even we have done for reserves, right? Reserves. So these two entries we have passed. How much balancing figure we had? 42,000, isn't it? All clear? I think so. Next two entries we are going to pass it for if you have any debentures, if you had taken any debentures, mean we are going to pass that entry. Yes. So directly write it here. Yep. Yes. Third entry will be PC discharge entry, which means we are going to pay them. So what we have debited in the first entry, business purchase account debtor to liquidators S account. So liquidators of S Limited account debtor. How much PC we have? 5,37,000, isn't it? This will be transferred to which we are not paying in cash. We are issuing preference shares as well as equity shares, isn't it? So equity share capital account, equity share capital account to preference share capital account. So in first only we have calculated the values, isn't it? So in equity capital we are going to transfer 3,50,000. In preference 1,87,000 we are going to transfer. So being PC discharge, kindly write the full form. So PC means purchase consideration. So fourth point is we are going to issue the new debentures. See, I'll show you the question. So the debentures of S Limited will be converted into equivalent number of debentures of P Limited. So these debentures are going to converted into P Limited. So we are going to transfer it, same value, in the same value we are going to transfer it. So we are going to write 13% debenture of S Limited, isn't it? So S Limited we are transferring now. Debtor to 13% equivalent, we have not changed the interest given, 13%. Yes, wait, sometimes these things will happen. 13% debenture of P Limited. So same equivalent value, which means 35,000. So being discharge of debenture, done by issue of new debentures, we can write new debentures in P Limited, isn't it? These are the basic entries that we are going to pass it, isn't it? So next we are having this is the part A of your questions, which means we have completed only one part. So these these 4 entries are there, na? These are the part 1 of your question. So we have another one question, that is part B. We are going to calculate balance sheet, isn't it? So how we are going to calculate the balance sheet? We have so many things, we have paid something, we have received something, isn't it? So for that purpose definitely we are going to do some working notes. So there will be some calculations. Basically the calculations will be on the reserves. Why? Because we have, see in question, we have transferred the losses while calculating journal entry itself. We have transferred our losses in the general reserve category, isn't it? So in general reserve we are going to transfer it. Okay, so these general reserves we are going to do some calculations. So calculation of general reserve to be shown in balance sheet. So in which value I am going to represent it. So we are going to show that. So calculation will be like, so general reserve of P Limited we are going to show first, because I am going to prepare balance sheet of P Limited, isn't it? I am not going to do with anything with the S Limited. I have transferred all the S Limited assets to my company, which is P. So I'm going to calculate only my company's values. So general reserves of P Limited is 50,000. So the value which I have in calculating the assets and liabilities taken over, that time I have sustained the capital loss. I'll show here. In journal entry, I have sustained capital loss, isn't it? That one will be transferred to P Limited's general reserve. So less capital loss transferred to general reserve. So how much we have transferred? We are going to transfer 42,000. Loss, isn't it? If you have loss, mean we have to deduct it. So 8,000 is the value. Got it? This is how we are going to calculate. Very easy, simple one. Or this can be done in another way. This is one method. Another method, see, you are going to add both S Limited general reserve of P Limited is how much? 50,000 we are having, isn't it? Same general reserve of S Limited we are going to add. How much? 25,000 we are having in the question. Add it, 75,000. Got it? Next, less balance value of PC. How we are going to do that means purchase consideration. How much we are having? 5,37,000 we are having, and S Limited share capital. We are going to deduct this. 4,70,000 is the value of S Limited capital. Minus it. If you minus it, wait, we will be getting 67,000 as the value. This 67,000 and 75,000 will be deducted again. So balancing value will be 8,000. So both the methods are correct. But in a different format. So in both the values you should have same value as 8,000 while calculating things. See, 8,000, isn't it? So the value of general reserve should be maintained as 8,000 in the balance sheet. Okay, so now we'll solve the balance sheet now. So balance sheet of so and so company. Here we are going to calculate for P Limited as on 31st March or 1st April, whatever they have given in the question, that value you are going to write, isn't it? So hopefully I'll write the we are going to follow the vertical format. So as usual, you all know that. So first one will be equity shareholders fund. This is the heading, shareholders fund. Under that we are going to record all the headers. So first thing will be share capital. Under share capital we'll mention equity share capital. So equity share capital we are having 8,50,000. How you got 8,50,000? So P Limited 5 lakh. So we are having P Limited 5 lakh, and in purchase consideration we are having 3,50,000 as the equity share capital, isn't it? So if you add both the things, you will be getting the value. So 8,50,000. Got it? After equity share capital we are having preference share capital. So preference share capital already I have calculated. There itself preference share capital, directly we can write 1,87,000. Next we are having another this is 15% equity share capital. So we can merge different different share preference share capital together. Here we can we can't add the both companies together because the percentage is differing. So this is 15% preference capital. Next one is 14% preference capital. So the dividend value of both the things will get changed, so we can merge it. So 14% preference capital is share capital is valued at 2,20,000. Next we are having reserves and surplus. This is another heading. So reserves and surplus and surplus. Under reserves and surplus we have to mention all the reserves we are having. First one, general reserve. So in general reserve I have shown the working note already, so very simple and easy. So we calculated the value as 8,000. Next we are having export reserve. So here we are going to add both companies' reserves. So if P Limited is having export reserve, no, so P Limited is not having export reserve, so only S Limited value we are going to write. So directly we can write 50,000. So 50,000 as the value. Next we have investment reserve. So 10,000. So next we have profit and loss account. So profit and loss account, P and L account. So here we are going to add both the companies' profit and loss. So 75,000 plus 50,000 of S Limited. So both values will be, if you add both the values, 1,25,000. So next we are going to enter the non-current liabilities. So here we are going to mention the non-current liabilities, which are long-term liabilities. So here we are going to mention the mortgage loans, secured loans and debentures. So those things will be entered here. So here we are having debentures only, right? So directly we can write debentures. So 13% debenture. So debentures are valued at 50,000 in P Limited and 35,000 in S Limited. If we add both, we will be having 85,000. Next, obviously we are going to mention current liabilities, because all non-current liabilities are got over, we don't have other anything. So current liabilities. So under current liabilities, like provisions for taxation's kind and other things like sundry creditors, bills payables, trade payables will be entered. So in our question they have directly mentioned So current liabilities as 1,15,000. So this is the value of liabilities. So let's see the total value of liabilities. So if you add both the value, if you add amounts, so total will be 16,50,000. So total, I'll just mention as total. Let's see whether the assets are going to match or not. So we are going to start with assets. Yes. So assets will be assets. Under assets, first we always have non-current assets. Non-current assets. Under non-current assets, we have two types. One is fixed, or we can call it as tangible and intangible assets. So fixed assets, under fixed assets we have assets like land and building we are having, isn't it? So land and building. So how we are going to write it? So here also we are going to show both companies value. So all the assets we are going to show it like that. So 2,50,000 plus 1,55,000. 55,000 we are having. So value is 4,05,000. So I'll just write all the assets and lastly I'll just calculate. So land and building. Next we are having plant and machinery. So plant and machinery. So plant and machinery valued at 3,25,000 plus 1,70,000. Next we are having furniture. So furniture of P Limited is rupees 57,500. 57,500 plus 35,000. Next we are having investment. So investment of P Limited 1,25,000. 25 plus 95,000. So these are the fixed assets. Next we are having current assets. So non-current assets are the fixed assets. Next we are having current asset. Under current assets we are going to mention stocks, debtors, bills receivable, cash and cash equivalent, debtors, so short-term investment, kind like that. So we are having investment. I have to mention now. So current assets we are having, firstly we are having stock, next debtors, next we are having cash and bank. I'll mention the amounts now. So stock of P Limited is 90,000 and S Limited is 1,03,000. Next debtors are valued at 72,500 plus 52,000. Next cash and cash equivalent 70,000 plus 50,000. Okay, these are the assets we are having. So now we are going to add those values. I have not entered the values now, just I have written. So now we are going to add all the assets and we are going to writing in the amount column. So here we are having 25 plus 2,50,000 plus 1,55,000, 4,05,000. Next 4,95,000. If you add, you will get the same value. So next we are having 92,500. Next 2,29,000. After 1,03,000 plus 90,000, 1,93,000. So small calculation we can directly do it, right? So 72,500 plus 52, 1,24,500. 70,000 plus 50,000, 1,20,000. Let's see, if you add it, you have to get the same value. So 1,04,05,000, 1,25,000, 4,95,000, 92,000, 2,29,000, and 1,93,000, 1,24,500 plus 1,20,000. Yes, exactly, we are getting 16,50,000. So total yes, yes, so total A and B are matching now, which means assets and liabilities are matching. So our problem is correct. There is no mistakes in the calculations, isn't it? So simple problem, very easy. Hope you all understood it. So if you have any doubts, kindly comment in the comment section. If possible, I'll try to solve it. If you want to know, start with any new concept means also, you can tell me. You can give me suggestions also. So feedbacks are accepted. Thank you for watching. If you like this video, give me a like and subscribe to this channel. Thank you.